Hi, everybody. I'm here with Kara Herbeson, who is with Tribe Financial, a mortgage broker there. They're located here in Burlington, just off Skyway Drive. I want to thank you, Kara, for taking the time to have a chat. What's been going on, obviously, with all things considered, there's a lot of question right now in the mortgage space along the options that are available and whether or not we should be doing them. So things like mortgage deferrals, putting other options, lower rates, closing, things like that. But can you tell us a little bit about the state of the union right now, the options that are available, and maybe a short bit on the pros and cons of these things?
Sure, absolutely. I think one thing you're probably referencing, and just to backtrack there, yeah, I mean, everything's been really upside down for many industries in our marketplace today. So a lot is changing, and we're all really just trying to catch footing and gain control over that. So when it comes to the mortgage industry, one of the major things is the mortgage deferral. I mean, the government has been exceptional when it comes to supporting their citizens. They really don't want to see anyone lose their home. So if your employment has been temporarily uh, disrupted, what they're doing is they're providing mortgage deferrals. And one thing I do want to make clear is that mortgage deferrals, it is a mortgage deferral in your payment where you can sort of take a break from making your mortgage payments. Debt relief where they're forgiving that debt. You will be expected to pay it back, and in all fairness, that makes sense. So if somebody is finding themselves in that position, absolutely, please certainly call your institution that your mortgage is with and request that deferral period. What I am noticing is that lenders are doing a very quick scrub on it, asking one or two questions, and then they're providing short deferral periods, being anywhere from 1 to 3 months is what I've been seeing. You will get up to 6 months. They just want you to call back at that end of that 3-month period to request it again.
Sure.
So it is quite easy in that regard. So what does that payment look like when, the mortgage deferral period is over? Well, if your amortization is going to sit or stay in around the 25-year mark, you are looking at an increase in your regular mortgage payment, principal plus interest, of plus $15 for every $100,000 that you have left owing on your mortgage. So it's not substantial. I mean, it's substantial, of course. You are going to have to pay it back, but it's not doubling or tripling your payments.
Right.
So it really is the government helping our citizens out. And in fact, we've already done, I believe the estimated is 6 million Canadians so far to date. So it is good.
Okay, great. The Bank of Canada continues to look at the rate, and subsequently the mortgage rates may differ. The question has come up even prior to the COVID crisis. Should someone break their existing mortgage in order to take advantage of what might be a lower rate today? If they should, what's generally the conditions or the parameters that person is facing where that choice might be a positive choice for them?
Great question, and I'm glad you've asked it because I know where it's coming from. The media is fabulous and fantastic for alerting everybody to these great mortgage interest rate drops from the Bank of Canada. A couple things to know that we are in COVID-19, so to speak. Yes, the Bank of Canada has been dropping the interest rates, and that's really to protect our economy and to continue confidence, build confidence. And make it cheaper for people to borrow money, mainly lenders. And what that means is if you are currently in a variable rate mortgage or you have a secured line of credit, absolutely you are winning by far. If you were to break your mortgage today and refinance or go to a different lender, what you are going to see is that the discounts that were once provided to variable rate holders are no longer available. In fact, it's now variable rate plus maybe 0.15%, okay? And to that note as well, fixed interest rates have increased as well. And the reason for all this movement and chaos in the marketplace is that we don't know what's going on with our economy, and neither do lenders, and nobody does. We don't have a crystal ball. So again, like I said, we're just trying to, grab our footing and make of it what we can for now. My recommendation, if somebody was up for renewal and you are still have employment, because you are still going to be needing to earn money in order to renew or refinance, what I would maybe recommend potentially right now is maybe sitting in a variable rate. Take advantage, because they are currently lower than the fixed interest rates, which are good. Sit there. And because the penalty to get out of that mortgage, if you were to switch lenders for a cheaper fixed interest rate in the future, when the economy sort of does start to settle, and interest rates come back in line, it is only a 3-month interest penalty. Or, all lenders, if you do go into a variable rate mortgage, will allow you to change that and flip that into a fixed rate mortgage. So it might be a good strategy to do at this time.
Well, it's interesting, the sheer options that people are facing leads me to kind of assume that dealing with somebody like yourself in the mortgage broker space allows them perhaps a little bit more flexibility. Certainly the one-to-one experience that you offer clients, that I know you offer clients, and you then have access to multiple products and services. Is it fair to say that if somebody has these questions, they're coming up for renewal, that they could reach out to someone like you, and that is something that you would take on right now with all these craziness aside?
Oh, absolutely, Andrew. Of course. I am here to help make sort of some help make, understand the marketplace and what's going on in it. There is a lot going on. And if you're about to go into Google, please either Google it and then come and speak to a professional that can help guide you, because there's a lot of information out there that's muffled and people don't understand it, and rightfully so. So please, absolutely, I'm always here, of course, for no cost to that client, to ask some questions.
That's great. And I'm assuming like all of us that are sitting there in so-called essential, we're doing things in Zoom. We're not necessarily supposed to be speaking to people in person. That's the same with you. You would be doing a lot of this on Zoom and be able to help fully. You're kind of working full time for your clients whenever they need it.
Absolutely. My job, really, my role hasn't changed much in that facet, because we are 100% virtual. I can, I always do enjoy meeting my clients face to face. Of course, that's something I enjoy doing at one point in the cycle, but really I could go from, first conversation to closing of that mortgage, with never meeting you face to face. Everything can be signed over online, which is great.
Great. Well, thanks very much, Kara. I appreciate it. We'll try to do this again, maybe as things progress and options and rates and more questions come up. We'll try to do this again. But I want to say thank you, and I appreciate the time you've taken to share this information. I'll talk to you soon.
Absolutely. Thank you, Andrew. I appreciate it.